Welcome to the May 22nd, 2017 Advance Report for McGowanGroup Asset Management clients. Thank you for joining us. Brief video today designed to increase your understanding of the current markets and increase your ability to make profitable decisions in today's markets. We start with the top headline. S&P 500 graph that you see here indicates that midweek correction. We woke up Thursday and the Dow went straight down, closing down 373 points. That was followed through on Thursday. All of this, only explanation we found was, we'll call it the Comey correction, politically driven headlines, and it reversed on Thursday. We closed up 100 Dow points. You can see that rally beginning here, and we followed through with another 100 by Friday morning. What does it indicate? It means there's a lack of sellers, there's a lack of anxiety in the financial markets currently. You can see this tight trading range. The Trump rally takes effect after the election. Now we've been in this tight range since essentially Valentine's Day. How long do we stay there? We don't know, but it is remarkable stability in U.S. blue chip equity, at least for the time being. Dollar versus oil. Notice the perfect inverse correlation between dollar and oil. It is notable that as the dollar plummeted, we began to see we had higher oil prices corresponding to that. Obviously, if you import oil, dollars go out, they get sold for other currency. That's one of the major impacts that you can see here. But with the shale revolution, the supply causing the correction to 27, this week oil closes at about 50. Now, we're seeing production estimates from U.S. shale as high as an additional 1 million barrels a day, and we're already on pace for actually more than that based upon the increase so far this year. 1 million barrels a day additional would replace pretty much all of the OPEC cuts, and the extra supply from deregulation could actually push oil prices back below 40 at some point. Very dangerous for exploration and production companies, which are reportedly burning about $9 billion a quarter in cash in the black gold rush. Global interest rate tour. Briefly, U.S. Treasury 10-year, 2.25%. These are all the countries and what they pay to borrow money for 10 years. Japan, 0.03%. No thank you. Well, Switzerland, if you want to hide your money in Switzerland like a Russian, well, you have to pay money, minus 0.17%. That's what a negative interest rate is. But look at this. You loan money to France at 0.75%. I'll take the U.S. any day over that. Germany, 0.33%. And what does that mean? I mean, if we look at this 1.5% for Spain, wow, I'll take the U.S. any day. And that's true for global investors. What does it mean for interest rates? Let's go to the emerging markets, and then I'm going to talk about the long interest rates. All right, Peru borrows money at just 3%. Part of this is saying the commodity export countries, these emerging countries, they actually got their financial house in order, with the exception, of course, of Venezuela, a 24% yield. The only reason there's a bid on that bond, I believe, is the oil backing. Ukraine, 8%. Brazil's borrowing money at 5%. Russia borrows money at 4%. This compression in global sovereign yields continues and is likely to continue through the rest of 2017, unless there's a systemic shock. This is the 30-year U.S. Treasury. Big implications for portfolios. Well, 3.2% was the post-election peak. You can see the Trump effect here. We got growth and inflation as a premise. It hasn't materialized yet, and this yield settled back down. Notice the big drop this week in that yield. Why? Actually, people were panic buying treasuries. It appeared that money flow was there, pushing treasury prices up as equity went down on Wednesday. But the rates didn't spike back to where they were. They stayed at about 2.9% on the 30-year Treasury to close the week. Bottom line for investors, anything paying over 6% could become more valuable between now and the rest of the year. Thank you for joining us for this week's Advance Report. We appreciate your feedback, especially those of you that liked us on YouTube. Great feedback, including my dad, who said to get a haircut, which I clearly haven't done yet. NetWorthRadio.com. I'm Spencer McGowan, President, McGowanGroup Asset Management.